Hello, fellow traders. 'Tis I, the Rumpled One, coming to you. Oh, this is too funny. Tuesday, July the 27th, and the year is 2021. I thought I had that set up. Let's talk trading. How to analyze charts, part 2. And as you all know, these videos are for educational purposes only. Your results may differ from mine. Yesterday we were talking about the daily charts, and we were getting down into the hourly charts, and I had mentioned something about return bars. And I was looking at this bar because I think when I made the video, price was up here. And I said that price is probably going to get to the open of this, come back to the open of this bar, which was 37.78. I said I didn't know when it would happen, if it would be yesterday or today or later this week, or maybe might not ever happen. But I knew, based on statistics, based on observation, that price usually returns. And so you see here, price did return. Now, some people go, oh, you got lucky. But the thing is, we're talking about trading. And trading is not an absolute. There's no guarantees in trading, really. And so, this worked out this time. Now, of course, I'm looking at this bar here, open 38.15. I'm going to say price needs to get back to 38.15. It might happen, it might not. I don't know. That's why we have stop losses. The thing is, price could start going down here. I could get short, then it could reverse. I could still make money on a trade anticipating this. But it might not work out that way. So what you have to do when you're analyzing charts is you're going to say, well, I believe price is going to do this based on what I know right now. Now, something else could happen, and you could say, well, now, sometime later, whether it's 1 minute later, 10 minutes, an hour, a day, a week later, that this may no longer be valid. But you have to understand, we're not dealing with absolutes here in trading. Anything can happen. And that's why you have to employ your stop loss. And you just have to take these things, as they come. It doesn't mean anything. Does this mean I've got a crystal ball? No, of course not. Let's not be silly. But what this says is that, based on statistics, there's a pretty good opportunity that, this might work out as I think it could work out. And if you look here, as you can see, price just couldn't seem to close above that 38.30. And it was like right here would happen the same thing. And look what happened. Now, look what I talked about yesterday. You see all these wicks. All of a sudden, price shot right through it. Right through that 30, hit the 38.40, which is the launch pad, and it kept going all the way up to 38.90. And it's just one of those things that, once again, it's just observation, time in the seat, time watching the charts, and seeing these types of moves that price does on a regular recurring basis. There's really no magic to it. There's nothing special about it. But you just have to understand that, the market's made up of a lot of different traders out there. When I talked about yesterday, I talked about things like, imbalance zones. Right now, look at this huge imbalance between here and here. Big imbalance. There, there's some orders that probably need to be filled there. And that's just, something that I think a lot of traders forget, that, they get so enamored or so deep into these charts, they forget that this is just a representation. That's all it is. It's like a map is not the territory. The chart is not the market. The market is people, just like Soylent Green. It's people. It's other traders out there. And so, one of the things I think you have to look at when you're trading, you could almost think of it. It is an auction in a way, and it's a game in a way. But if you think about, there's a bunch of people standing in line, and they're the traders, right? And you decide to, let's just say, you think right now price is going to go down, so you say, I'm going to sell at 38.80. Okay, so what you want to have happen is you get in there and you sell short. So now you're holding the pound at 38.80. So what you're hoping is that there's a whole bunch more sellers come in and they say, well, I want to sell at 38.79 or 38. So there's all these people who start lining up. And then on the other side, there's these buyers. Maybe they're saying, okay, I'll buy at 38.75. But you can't sell to the 38.75s, or you can't replace it there easily, because price has to come down to your level, right? Because you sold short, you need somebody to buy it. So until price gets to that point, you're kind of you're holding it. So as you can see now, price is dropping, right? And if you're short, you need to buy it back. So if you got short at 80, you have to look and see what the bid and ask is at the time. And you can see whether or not you can then buy it back cheaper. So right now, let's just say there's no spread. So you sold at 80, you could buy back at 74 right now. So you basically made a good guess. But there's all these people in line, so what you have to do is think about it as all these traders in line, and it's like you just hope the line is filling up in your direction, where there's people saying, no, no, I don't want to buy. So these buyers, they're getting out of line and moving down, and the sellers are getting in line and pushing the price down. And you just hope that those buyers and sellers do what you want them to do, so you can get out of that trade with a profit. And I think if you think about it that way, and then you look at the chart that way, you go, oh, yeah, I get it. So when you're analyzing a chart, just remember the chart's just a representation, but there's real people behind these moves. Unless, of course, even if they're somebody turned on an EA or a robot or whatever you want to call it, a black box, there's still somebody that pushed a button that um, turned that black box or robot or EA on. And as you can see, there's a Walmart line right here at 70, but the open was at 79. You may not have wanted to wait that long. In fact, you see it crossed above the previous high, and then came out of that wick zone, there would have been the short trade out of that wick zone, which would pretty much be when it crossed the H1 open, which would have been the holo for the day, the highest open trade. So that's just one way you can analyze the chart. Now, let's see, I wanted to talk about the pivots because, once again, based on statistics, pivots get hit, and you can see today, today's pivot got hit. But I also like to look at the H4 pivots. I have to check something here. And this is the missed pivots plot indicator because it plots the chart. I just want to show you guys something. Override current. If you turn this to set this to true, what it'll do is anything below the daily time frame, it'll be using the calculations from the daily pivot, not the current chart period. So I just wanted to make sure that was accurate. So you can see here, there's not many missed pivots on H4 either. We've got a few, but not that many. So when you're looking to make these day trades, these intraday trades, so like when this H4 opened, it opened above the pivot. You see it came down, hit the pivot, and then started to reverse. I use these for targets and for biases. So when this candle opens, I'm bias short. Once it hits the pivot, there's no bias. You trade what you see. And so see, it broke the high of the previous H4 and took off. That's just another way to analyze the chart. So once again, we took out the daily pivot. We're way away from the weekly pivot, but we took out the pivot from last week that had been missed. So once again, these weekly pivots, they get taken out. There's not that many missed pivots. It's the only one this year is the current one. So, and then for the monthly, you can see here 39.53. Maybe we hit that pivot, maybe we don't. So far, it's the only monthly missed pivot. You have to go back to 2014 to find another missed pivot. That's just how strong these are. And so for analyzing charts to determine a bias, a trade direction, you can look at these pivots to determine that. And one of the things, we talk about the wick zone a lot, and it's not just the daily wick zone that we talk about. It's almost any wick zone, as I just showed you. Where was it? Here. Where it went out of the wick zone of the previous H1 and came back in it and then came out the other side. And you can see here we hit a low of 71. It's back up to 77. So if you were short and you didn't take your profit, well, market's starting to take it back. That's why if you're day trading, sometimes you just have to take those 2, 3, 4, 5 pip trades and take it. And if price keeps going in your direction and you miss out, well, that's okay, because at least you got some of it. One other thing I wanted to mention was, and you know what, the fastest 15 minutes in trading is out. So I was going to talk about the ATRs, but don't have enough time. So when we do how to analyze a chart, we'll probably just do ATRs on 1 or 2 days. So fellow traders, I hope that helps. Maybe you'll be targeting that short I pointed out today. Maybe you won't. But no matter what, just remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. And I'd like to thank the latest couple of Reddit subscribers there who picked up my Never Lose Again subreddit. Appreciate it. Thank you very much. This is TheRumpledOne, over and out.